People ask me all the time how I draw Fibonacci extensions and what's the difference between finding a long-term Fibonacci extension and a short-term. Okay, so first of all, this is SPY 1 year, 1 day. And just taking a look at this right now, this was what I call the comeback rally. Okay, this is after COVID sell-off, the first major larger upward swing we had than any other upward swing. This extension is still valid today. Off of these lows at 319.38 and then the top at 364, that was exactly 100% of this comeback rally move. So I measured from low to high, pitched it off the low, let it go up to the 100%. When it came down to the low, measured it up to the 100% again, and so on and so on and so on until we hit 364 right here. You can see this is 100% of our comeback rally move. I even have it labeled as comeback rally, and then we started to sell off and bounce around. So that would be a good example of a long-term Fibonacci extension. If I activate it, you can see it goes right from the low to the high. Okay, that's a very long-term target. You can see roughly here we went up to the 618, came down to around past below the 282, and then came up to hit the 100% band. And this is what I call the W setup. You can see the W right there. Obviously there's a lot of bumps and bruises along the way, but long term, that's where we're going. So now let's look at shorter term relationships between price movements. Looking at this 5-day 15-minute chart, let's try and find a decent intraday low to high swing. So here's a low, here's a high, and a lot of this is just practice. And the way I find if a move is valid, if I measure the low to high and pitch it off the low, I want to see it obey some form of these fib extensions. Here you can see we're finding serious resistance on the 618 and serious support on the 282. So that tells me this range is still valid. Okay? So eventually we come up to make the 282 here and come down to a new low. So I'm just going to activate this, move it off this low. Now we make the 618. So our upward swings are getting smaller. And you see a double top here around the 618. There's not enough buyers, so we're going to sell off. So simply activate this, move it off of the new low. Now you can see we make the 1282 and find some serious resistance there. That tells me this measurement is still valid and still having relationship to its past previous upward swings. Now, getting a little bit more closely involved in today and looking for short setups. Off Friday's lows, you can see we almost make the 1618. So we had a violent upswing. Okay, our upward swings are getting larger, but we want to see the relationship between the next upward swing and this upward swing to determine a trend. Because here we come down to bounce off the 282. So that's our new low. So we're going to activate our drawing and move it off that low. Now you can see we only make the 618. So this whole thing may kind of look like a bull trap, just to trap in buyers. And now you can see we're finding serious resistance on the 618 extension of our previous upward swing. So all these things can tell you that a short setup could be in play. Because A, our upward swings have gotten smaller. B, VWAP is facing down and rejecting price action. C, we're not bouncing off of the 50-day moving average with any sort of conviction and breaking through it. And D, if you look right here, the 8-day moving average is rejecting price action. As well as up here, the 20-day moving average is rejecting price action. So all you would do to find a short profit target would be, let's get rid of this for now. You measure your previous high to low swing and look for relationships with our current low swing. So you can see here we make the 618 and then come back up. Now you can see we're making the 28.2 extension. and bouncing off that, and then making higher lows. So downward swings have gotten smaller and smaller and smaller. That may tell you selling pressure is coming to an end, because the relationships between 1, 2, 3 things are all consistently getting smaller. So this is how you look at swings in relationship to other swings. And it's not just about, oh, we made a 1618 here, we must be going up, because no, you have to look at the next swing and the relationship of that swing in relationship to its previous swing. So when you see selling pressure dying off and off and off, maybe you want it to go long, and when you see upward swings getting smaller with some sort of confirmation, VWAP, 50-day moving average, I mean, just look. You don't have to go short right here. You can see candles are getting bigger and bigger. You could have gone short somewhere in here pretty safely. And you want to wait for the selling pressure to die off before you close out your short. So I hope that's not too much of a wordy explanation. Try to keep it as short as possible. But remember to look for relationships between swings and other swings in both directions.